Hello friends, my name is Ramasu. Today we shall discuss about a topic that what is withholding tax. Friend, today's topic is very interesting, especially if you have interest in tax calculation and you want to know about what is actually withholding tax. So let's start. First of all, I would request to please subscribe to my YouTube channel and click on the bell option as well, so that my new videos can reach to you. And also you can follow me on the Facebook page and Instagram as well. Friend, withholding tax is the money an employer deducts from an employee's gross wages and pays directly to the government. The amount withheld is a credit against the income taxes the employee must pay during the year. Non-resident persons are also subject to withholding tax on earned income as well as on other income such as interest and dividends from the securities of US companies that they own. The vast majority of people who are employed in the United States are subject to tax withholding. Now, understanding the withholding tax concept. Tax withholding is a way for the US government to maintain its pay as you go or pay as you earn income tax system, taxing at the source of income rather than trying to collect income tax after wages are earned. US resident withholding tax. The first and more commonly discussed withholding tax is the one on US residents' personal income, which every employer in the United States must collect. Under the current system, employers collect the withholding tax and remit it directly to the government, with employees paying the remainder when they file a tax return in April each year. If too much tax is withheld, it results in tax refund. However, if not enough tax has been held back, then the individual will owe money to the system. Generally, you want about 90% of your estimated income taxes withheld and sent to the government. This ensures that you never fall behind on income taxes that can result in heavy penalties and that you are not overtaxed through the year. Investors and independent contractors are exempt from withholding taxes, but not from income tax. They are required to pay quarterly estimated tax. If these classes of taxpayers fall behind, they can become liable to backup withholding, which is a higher rate of tax withholding set at 24%. You can easily perform a paycheck checkup using the system tax withholding estimator. This tool helps identify the correct amount of tax withholding from each paycheck to make sure you don't owe money in April. To use the estimator, you will need your most recent pay stubs. You must recent income tax return, your estimated income during the current year, and other information. Non-resident withholding tax. The other form of withholding tax is basically levied against non-resident persons to ensure that proper taxes are paid on income sources from within the United States. A non-resident person is someone who is foreign born and has not passed the green card test or a substantial presence test. All non-resident persons must file Form 1040 if they are engaged in a trade or business in the United States during the year. If you are a non-resident person, there are standard deduction and exemption tables to help you figure out when you should be paying US taxes and which deduction you may be able to claim. There is a tax treaty between your country and the United States that can also affect withholding tax. History of withholding tax. Friend, tax withholding first occurred in the United States in 1862 at the order of President Abraham Lincoln to help finance the Civil War. The federal government also implemented excise taxes for the same purpose. Tax withholding and income tax were abolished after the Civil War in 1872. The current system was accompanied by a large tax hike when it was implemented in 1943. At the time, it was thought that it would be different to collect withholding taxes when they are hired and fill out a W-4 form. The form estimates the amount of taxes that will be due. The withholding tax is one of two types of payroll taxes. The other type is paid to the government by the employer and is based on an individual employee wages. It contributes to the funding for Social Security and federal unemployment programs since the Social Security Act of 1935 as well as Medicare since 1966. Now, what is the purpose of withholding tax? Friend, the purpose of withholding tax is to ensure that employees comfortably pay whatever income tax they owe. It maintains the pay as you go tax collection system in the United States. It fights tax evasion as well as the need to send taxpayers big unaffordable tax bills at the end of the tax year. Why did employer withhold too much or too little tax actually? The answer is that federal tax withholding is based on the information you provide on your W-4 form, which you will out and give to your employer when you start a job. If you are significantly overpaying or underpaying on income tax, you will probably need to fill out this form again with more up-to-date information. Who qualifies for exemption from withholding? Employees with no tax liability for the previous year and who expect no tax liability for the current year can use Form W-4 to instruct their employer not to deduct any federal income tax from their wages. This exemption is valid for a calendar year. So friend, thanks a lot for watching the video. I hope you like this video. If you like it, please share it with your friends and colleagues, and thanks a lot for watching the video. Thank you friends.